Hey traders, welcome back. So I've just found some trading plans and I want to run through them. I've got about 3 here to look at. I'm going to discuss them, critique them, and let's kind of see if we can come up with our own way of making a trading plan, having looked at these. So the first one I'm looking at is this very brief one. It's here. He's got his day trading system, his time frame. He's looking at a 1 hour chart. He's looking at the indicators that he's using. So in this case, he's identifying his new trend with a moving average crossover system. It doesn't say what particular moving averages he's got, but then again, it doesn't really matter if he knows what his strategy is. That's fine. Also, he's adding an extra layer onto his decision-making process by saying, hey, indicators that confirm the trend, RSI, stochastics. He's not actually saying here so much as to what he means by confirming the trend. You know, what does he mean by that? Is he saying, he's not going into much detail with that at all. Okay, so now he's getting a little bit more interesting with his trigger. So his long entry says both his moving averages should be pointing up, RSI is above 50, and stochastic oscillator is going up. A short entry looks like it's just the opposite of that, and his exit is, he says MA gives opposite signal, RSI gives opposite signal. So okay, it's not too much detail with this. Now you have to balance detail against having a concise plan. What you don't want is literally pages and pages and pages of stuff sitting on your desk. You want to keep it to 1 page if you can, but then again you also do want to have some kind of structure to it. Now this guy or girl may well have all this stuff laid out in his strategy, so he knows which moving average he's talking about, he knows what the settings are on his RSI. So all he's doing here with his plan is saying, listen, if both the 50 and the 20 period are pointing up and my RSI is, then I'm going long. And does he trigger it as that turns, or whatever it is? What he's on, it says on that 1 hourly chart. I guess he's waiting for it just to trigger and then he's buying that. And similar with the short entry and exit. The good thing about this plan is he's got his risk management here. His stop loss is 20 ticks by the look of it, or 20 pips. His profit is 40, and his risk reward ratio is 2 to 1. So very, very simple. He's not going into too much depth here in terms of how much he's going to risk financially in terms of money. Is that 20 times £10 a point, £50 a point? Is it a variable? Is he always doing that 2 to 1, or is he using support and resistance? He doesn't go into that at all. But it's a kind of good start, isn't it? He's got his time frame, he's got his strategy, he's got kind of a little bit of risk management, but there's a lot to be done there. I think there's a lot more he could do with that thing. So let's have a look at some others. I've got this other guys here. You bring it in if you took a screenshot of it. Okay, trading plan. So this guy, or say a girl, I'm just going to use guy from now on, but it could mean either, of course. So he's got his goals. We talked about the goals versus the plan. He's got his goals really in the sort of top of his plan. It's not a bad idea to keep in mind what he's trying to achieve. So here he says objective, short-term objective is to develop a strategy that spots high probability trade setups to generate discretionary income as a part-time trader. His medium-term strategy is to evolve that strategy or bank of strategies and setups and take advantage of option trades. And his long-term strategy is to be able to use more actively full-time trades to generate secondary source of income. Okay, so those are his goals. We talked about separating the actual plan, sort of the operations plan, if you like, from the long-term goals. So fair enough, he's kind of put them all into one. Let's see what else he does here. So he says he's swing trading. Great, we talked about exactly doing that, defining what type of swing trader you are, the time we're putting into place, the style. His whole time, 2 days to 4 weeks, great. Primary setups, momentum trades, secondary setup, trend reversals. This is fantastic. This is exactly what you want, guys. You want to outline who you are as a trader, how long you're expected to hold the trades for. Is it minutes, seconds, hours, weeks, whatever? And also, the setups that you're going to employ. So he has put here, yep, I'm momentum trading, whether that's his first pullback trade, second pullback, whatever. He's also got he's labeled it secondary trend reversals. Good. I like what he's done. Okay, how does he pick his trades? Now he's getting some detail here. Stock selection, obviously he's trading stocks. Good, fine. He's got some sort of criteria. He's got the CAN SLIM, the classical fundamental criteria here. High growth, daily volume criteria. This is obviously for his filtering, his capitalization, his sectors that he's looking at, and sectors that have got the highest relative strength. Great. So he's already drilling the boundary of stocks, which is just a massive universe of stocks, drilling them right down into, I guess that's going to be 1,000 or so stocks, something like that he can trade from. Good. So now he moves on to his technical indicators. He's saying, okay, I'm going to use support and resistance. A bit vague there, but okay, we've got a bit of a guide. Moving averages. So he's got a long-term trend, immediate trend, short-term trend. I guess he doesn't really say what he's doing. Maybe he will do in the next page of his plan. I think he's just kind of saying how he's setting up his charts here, right? He's got his support on it, resistance on it, his moving averages, long-term trends, short terms, and he's gauging it from that. He says he's got a 15-minute and hourly chart, so he's using different time frames here. Volume, he's got a 20-period moving average on his volume, and he's also got stochastics on his screen. Okay, that makes sense. Let's have a look at the next page of his plan. If I can find it. That's not the one. Bear with me, gentlemen. Here we go. Actually, there it is there. That is it. Trading rules. Okay, here we go. Now he's drilling down into more depth. And this is the same guy, by the way. I wonder if we can put them both in the same window so we can see. Let me try. If I can't, it's not the end of the world. But if we can, it'll be good. Close enough. Alright, so page 1 over this side, page 2 here. So now he's going through his trading rules. Good. He's got his broad approach, he's got what he's trying to achieve, he's got his long-term goals, he's got a trading overview right into trading rules. Let's go. So his long positions are when he has a moving average crossover on a simple moving average. Rising, short position crossover again. When he's taking a long-term trade, he needs a longer-term moving average to be rising. And his shorter-term trade, when he's got a flat 8 and 21 period. Breakouts from previous major support resistance may fail on first attempt of breakout. Okay. He's basically giving some sort of these are his boundaries, if you like, his restrictions. He's saying, listen, risk a little more, okay, but only if you have a high conviction. Doesn't say what his conviction is, but that's fine. You give yourself a little bit of flexibility. That's good. Now, this is where his restrictions are getting more refined. Look for an increasing volume, but be cautious when you've got low volume. So he's aware that you don't want to get involved in low volume breakouts. Don't chase breakouts when you miss them. Wait for it to pull back again. He's being very cautious. He's giving himself a restriction, saying, listen, I'm a breakout trader, but I don't want to chase them. Talks here about volume, talks here about when he shouldn't be trading, don't enter short positions when it's oversold. So he's applying some filter to his trades. Listen, I'm not getting involved when I've got an overbought or oversold condition on the short side or overbought long side. Those kind of things. Right, now he talks about his risk management or equity management as labeling a 0.25% risk per trade on lower probability and 0.5 risk per trade on higher probability. Doesn't say how he defines those, I guess, but perhaps he's giving himself a little bit of leeway with that. He does mention high conviction here. Good. He's narrowing it down and he's structured it in depending on two. $500 max loss per day, $1,500 max loss per week. If more than 5 losing trades in a row, we evaluate strategy. Brilliant. That is the perfect risk management thing he's got there. So if you were going to do this, you would put exactly the same thing. Your risk per trade, whether that's percentage or whether that's absolute. Okay, he's got 2 different defined things here. Again, that's perfect. If there's something that's a better strategy for you, split it up by all means. His max loss per day, so he's got his boundaries in for his total risk on his day, total loss on the week, and he's revisiting his strategies if he has more than 5 losing trades in a row. Makes absolutely perfect sense. And a little addition to that is, once trade is profitable, race stops to break even, race stops to previous day's close when position is working. Fine, there's some extra layer of exit strategy in there. He doesn't talk so much, does he, about his exit strategy. But then again, comes down to that point of, listen, you've got to try to decide whether you are you really want too much on there or too little. By all means, have a big broad trading plan with all your goals in and really intricate, and then I'd recommend having a small trading plan literally based around what he was saying here, your trading rules and your risk management all on one page right in front of you all time. Okay, quickly, last one, guys, that I found, criteria. This guy is put it a different way and it makes a lot of sense. He's talking about the criteria for his trades, his zone of interest on his hourly, 1 hourly, He's giving an idea of what he wants to see there. I'm assuming he's looking to see if price is hitting his support level or resistance level, his risk reward ratio, his candlestick patterns, what increases the odds of the trade working. He's talking about if the zone of interest is also an FTB after engulf or a hook. Yeah, cool. A confluence with trend lines, so he's adding layers of edge. We talk about that. So all these are good stuff. Goes on to his trade management, 2% risk per trade. Observe price action, repeat 0.3. This is good stuff as well, guys. This is a little bit more intricate and makes a lot of sense, but it makes sense to him because he already knows what he's looking for. He's laid it out in front of him. So when he's in the trading day, he can bring it up and say, "Is it part of my trading plan?" Yes, it is. Carry on. So some great examples there. First one a little bit thin. Second one good, quite broad. Maybe he can have two and have one. But the point is, same thing, guys. It's rules, strategy, risk. Those are the three main things. Then you've got to have restrictions on there if you want, time frames, all that stuff. But if you have that laid out, build the plan, then you're going to have a great chance of moving forward. And if the plan doesn't work, you tweak the plan, then work with the new amended plan for a bit. Tweak it, work the new amended plan. Anyway, guys, take care. Back with another video soon. Bye bye.